Happy New Year, Daniel.
Happy New Year, Dan.
What are we talking about this year?
This year we're going to be talking about setting your financial year up for success, how to prepare for tax season, and some lessons learned from practicing and or from clients in 2024.
Welcome to the Science of Wealth, where we discuss the science behind financial planning and the art of learning and applying it. Okay, all fun New Year stuff and maybe a little bit of retrospective here. I think before I let you jump right into that, though, we have to congratulate you because you have just been promoted to an associate wealth planner. So, congratulations, sir.
Thank you very much. I appreciate it.
Round of applause, everybody in the audience. That was a great round of applause. All right, Daniel, hit me up here. What do we want to talk about first?
It's only fitting in the beginning of the year we start the conversation off by talking about ways to set yourself up for the year. There's a lot of things in the beginning of a calendar year that families and folks can start to do to set themselves up for a lucrative year. And I wanted to talk about that. So, first and foremost, what are some of the things you think folks should be paying attention to now in January and looking toward the rest of the year?
So I don't want to nitpick you too much on your choice of words there, but you used a really specific word that I think is interesting, which is setting yourself up for a lucrative year. So I'm going to say that is a potential outcome, but that may not be the goal for everybody. But I won't nitpick it too much. So when we think about planning for the next year, I want to set the stage here, and I'm going to use myself as an example. I am the type of person who wakes up on New Year's Day and would love to file their taxes that day. Like, I have the year-end data. I'm ready. And if it weren't for waiting for like W-2s and 1099s and stuff to show up, I would file on January 1st. Like, I'm ready to go. I use that as an example here because I think when you look at your upcoming year, the whole concept of New Year's resolutions comes to mind. But I think New Year's resolutions are often idealistic and fail to be grounded in your present. So I actually think the first thing to do in a new year, when we think about preparing for what's coming next, is to really just take some time and reset your understanding of where you are, at least in the financial terms, on what is my net worth at the end of 2024? What are my income sources going to be for this year? Am I planning on getting a new job, changing careers, pursuing a new degree or a promotion or a new opportunity? Am I going to start a business? But I think it makes a lot of sense to take stock of where we are going into the year and to try to define some goals for the year. So I'll give you an example. Like, in our business, I have a lot of KPIs and things that I track, but when I present to a mastermind group that I'm a part of, what I present is always essentially a 3x3. And what I mean by 3x3 is it's sort of a flow chart. I have just a successful 2025. And then below that, I have three major subcategories. And they'll be very broad things like successful in marketing, successful in growing the business, successful in developing the team. And then I'll have three sub-objectives that are 100% like pass, fail, either quantitative or qualitative things, but there's no squishiness to it. We will either succeed or we will fail in these things. And those are what I track for the entire year. And those are grounded in how the last year went. How well did marketing go? How well did business growth go? How has the team development gone? And what's important for me to look back a year from now at 2025 and say, this was a successful year, or we tried and we failed in these areas and we need to do better.
I think that's a great way to break down, KPIs or goals or however you want to discuss it. And I think a lot of times, when folks have these conversations at the beginning of the year, it's a lot of fun sometimes to talk about the goals. I want to make this much more money. I want to save this much more or go on this vacation, this or that. But what sometimes is considerably more important is not the output and the result you want to achieve, but more the input and what you're going to do to create that output. So if you want to go on a vacation, and that's the goal, we shouldn't be focusing on the output, which is going on the vacation. Instead, we should be focusing on how are you going to save for the vacation? How do we break that down into a quarterly financial goal and even maybe a weekly or bi-monthly goal and moving forward from that standpoint, I think is something that's pretty valuable when doing some of these goals and having these conversations in the new year.
And that's a perfect framing, because what I described is sort of outcomes driven, right? If we do this, we will have succeeded. If we get this much in new business, we will have met our revenue goals. If Daniel has completed 5 out of his 7 CFP courses, then that will be a successful education for Daniel. Yada yada. Those are all outcomes driven, and I think you draw attention to the most important thing, which is you actually can't control the outcome. You can only control the input. I'm always reminded of a Thomas Jefferson quote, which is, the harder I work, the luckier I seem to be. And that is the thing I think we need to keep in mind, right? A lot of people get disheartened when they go into trying to be a better you, trying to do the New Year's resolution thing, because by the end of January they said at the beginning, I'm going to go to the gym every single day, but they only went to the gym 14 times. Like, I've failed in my goals and woe is me. Like, no, all you can do is refocus and regroup and say, okay, I had a goal to go every single day. I haven't gone every single day, but it's a new day and I can go today. And tomorrow I can make the decision to go and I can make those improvements. And maybe you didn't lose weight by doing it, or maybe you didn't increase your personal record on how much you can deadlift or whatever your particular metrics were. But what's important is that you're putting in the effort, that you're putting in the time. Daniel, I know you're a big fan of talking about sort of the number of reps you've put in on something like your golf game, right? It's not the matter that you're just going to one day be a pro golf player. It's that you have to measure your success in that area by how many times you go practice at the range, how many games you play, how much time you spends practicing your stroke, and that it's productively spent. And the outcomes tend to flow from that.
I have another question in this regard, and just about habit building. If a client or somebody came to you and say year over year they have these new goals and things they want to achieve, but it seems considerably different from their lifestyle or norm, meaning that these new goals will allow them or require them to deviate from their habits considerably. Would you ever push back and maybe maybe offer some insight into maybe why that might not be a reasonable goal, given how many people create resolutions and end up falling off?
I provide pushback insofar as if somebody is going to really, I'll say, beat themselves up about it. I think expecting, there's an old expression, right? Perfection is the enemy of good. Or you can do General Patton, right? A perfect plan executed next week is worth less than a good plan executed today. So, I mean, there's an element here where I think sometimes we set unreasonable expectations for ourselves. We also get paralyzed by the planning, paralyzed by the intention. I've got to build a perfect spreadsheet so I can keep track of my perfect budget. And if I don't keep track of my perfect budget, then I can't control my spending. If I don't control my spending, then I'm not going to save. I'm not going to build wealth, and I'm going to end up in the poorhouse, and it's going to be terrible. Well, okay, maybe we don't need a perfect spreadsheet. Maybe we shouldn't, derail and catastrophize our future predicated on sort of this absurdly arbitrary benchmark. What matters is the effort. What matters is the intention. And more than anything is execution. I was reading a really funny little thing yesterday. It was somebody's tirade, but it was talking about how, you don't need a $99 fitness app. You don't need a smartwatch. What you need to do is go for a walk. What you need to do is go to the gym. What you need to do is go to that class. You can say that I can't succeed in my goals if I don't have the right tools, but you are the tool. You are the most important piece of any puzzle in accomplishing an outcome and providing for a future that you want to see happen in your life.
You make me almost want to create some new goals and resolutions. Getting me all fired up here, Dan.
I'm known as a motivational speaker, and the motivation is get your shit done. That's it. That's the speech.
All right. Well, in that context, I think there's some stuff a lot of people can get in order looking toward tax season, and those would be their tax documents. And I think that's a great segue into the next topic here, which is preparing for tax season. So for a lot of traditional filers, that's going to be a deadline of April 15th this year. And one of the main things we do in the beginning of the year is meet with a lot of folks and, explain what they should be expecting for tax season. So exactly how should somebody be preparing for, April 15th, given it's the new year now?
Well, I'm going to say the table stakes thing here, which is get all of your stuff together. Right, collect all your 1099s and your 1098s and your W-2s and every other relevant document that somebody's going to mail you or email to you. Right, that's just table stakes. If you're a business owner, get your books closed. I once sat down with a business owner. They owned a chiropractic office, not here in Longmont, so nobody you listeners would know, but I talked to them and I said, oh, and do you have a P&L? I said, yeah, we have a P&L from last year. And it's like, okay, it's like August. What do you mean from last year? Like, oh, well, every April before we file our taxes, we get our books caught up. I was like, okay, so you have books from April of this year? Like, no, we have books going up to December of last year that we got done in April. If you're a business owner, get on top of your finances. If you're not good at bookkeeping, or if you don't have the time and energy to do it, or you're not using software, and by the way, God forbid, Excel is not bookkeeping software. I promise your books are wrong if you're just doing it in Excel by hand or something. But all of that said, get your books current if you're a business owner. And again, this is just table stakes stuff, okay? Get all your stuff in order. All right, does that make sense first and foremost?
Makes sense to me.
I certainly hope so. So with the table stakes in mind,
sorry there, Dan. What by when? You said have books in order, have your documents ready for your either your tax preparer. Would you say by April 15th, or would you have an arbitrary deadline before then?
Now. Get your stuff in order now. Okay. Realistically, there's some stuff that you don't control, right? Like your 1099s are going to show up when they show up. But you should have a consistent system year over year where you have just a folder on your computer, right? It can just be called taxes or something like that. And every year, what you should be able to do is go back and look at the prior year and say, oh, I got 19 tax documents from these different places, and you should be able to checklist and say, should I be getting these same tax documents this year, right? Did I have the same bank accounts, the same brokerage accounts, the same retirement accounts? Did I have the same job or jobs, right? Did we still have a mortgage? Did we still have student loans? Did we have health insurance? Like all these tax documents should be pretty consistent year over year, pending the major life changes that have happened. And so you should be able to say like, yes, I should expect this. No, I shouldn't expect this because it didn't apply last year, or I'm not sure. And then you should be looking for anything that's new in your life as a documentation item. And again, you can't control that, but you should be able to checklist that you have or haven't gotten that stuff. Back to the business thing, you should get it done now. Okay. But again, I'm still on table stakes. I haven't even started to talk about how you actually prepare for tax season.
I think that's enough on the table stakes. Exactly how do we prepare for tax season, Dan?
So you need to figure out what camp you live in, and there's really 3 camps in tax preparation land, and it's important to understand where you live. Okay, there is I'm going to call it DIY camp. Okay, there is the bulk preparer camp, and there is the tax professional camp. Okay, so let me define these. The DIY camp is somebody who goes on the TurboTax website, the H&R Block website, Free Tax USA site, or God forbid they actually like go get the PDFs of the tax forms and do it by hand. But whatever, they're using just software or technology or paperwork of some sort to file their own taxes. Who is this good for? This is good for somebody with a W-2 income or a married couple with a W-2 income who have almost no financial complexities. So we have very little in the way of taxable investments. We don't have a big crypto trading log. We don't own a business or rental properties. And essentially our tax profile is going to boil down to like our W-2s and maybe some recording of like health insurance payments, HSA payments, and maybe student loan stuff. Okay. So very, very finite setup here. Okay. This is also good for, let's say, a retiree who is living on something like just Social Security and who maybe has a little bit of IRA income or something like that. But if I say, do you understand the difference between a 1099B and a 1099 DIV? And you're like, that is Latin to me. I don't know what you mean by that, Dan. Then you don't belong in this camp. Okay, because if you don't understand what that is, then you are going to make a mistake. Okay, so that's the DIY camp. A huge number of people fall into this camp, by the way, right? Tons of people have, from a tax standpoint, a situation that is so straightforward that it is essentially paint by numbers. Just take the numbers from your tax forms, put them into the software. You should be fine. The place where that camp can get in trouble is they start getting creative. They start going like, well, I drive a Prius, and a Prius does have a giant battery, and I think that might qualify as an electric vehicle. Like, no, it doesn't. Don't start looking for things. Don't start inventing tax credits for yourself because you're going to get yourself in trouble. If you find yourself doing that, pause, go on to group number 2. So let's talk about group number 2. Group number two are people who need to work with semi-skilled tax preparers. And what I mean by semi-skilled is they're not tax professionals. They're probably not enrolled agents. They're probably not CPAs. They probably don't have a decade plus of tax preparation experience, but they are people who work in your local H&R Block or Jackson Hewitt, who during the tax season do something like 200 to 500 tax returns that probably in the majority of cases actually belonged in group number one, but the person or the household in group number one was too busy or too confused or whatever it is. They just don't feel comfortable doing their own taxes. And so they're going to this person. Now, here's the trick. You do not need essentially any qualifications to get a P10 and to be able to file taxes. Like anybody in America can just open up a tax preparation business. You don't need to be an enrolled agent. You don't need to be CPA. You don't need to have experience. That is a problem, and that problem does sometimes manifest itself in this category, but what you're relying on in this particular category is that the person who works at H&R or Jackson Hewitt or the just the bulk tax practice, where if you ask the preparer how many taxes do you do, if their number is bigger than 100, you're probably talking to somebody in one of these types of businesses, even if it's not a big brand name. But you're relying on the fact that they do a lot of returns to be better at it than you, okay? Now, notice that I'm not really qualifying this group with something like, well, if you own a business, you should go here, or if you have a lot of investments, you should go here. Because remember what I said, semi-skilled. These preparers are, by the numbers, not highly qualified tax professionals. They just do a lot of tax returns. And so they're going to be good for somebody who would be in Camp 1, but again, doesn't have the confidence or the skill to do their own taxes, okay? Now, I give you the context of Group 1 and Group 2 because those are essentially on demand. You can get TurboTax instantly. You can get H&R Block instantly. You can walk into one of those branches of one of those big companies or big turnover groups in Group 2 pretty much instantly and get your taxes back almost the same day or like in the next half hour. So Group 3 is where the preparation and the planning really comes in. Group 3 are genuine tax professionals. These are people whose full-time job, 12 months a year, is to do taxes. And they are CPAs and EAs. They have masters of accountancy or masters of taxation. Some of them are tax attorneys, right? But they are highly skilled, highly trained professionals. And in that particular group, you need to have a very different set of expectations because over the last decade, not only have they become less common, there are less of them, generally speaking, than there were relative to the population a decade ago, but the work that they do and that they're qualified for, things like a business, things like corporate investments or stuff that accredited investors get into, things like limited partnerships or complex tax structures, work with any type of irrevocable trust where you need to have full trust accounting going on, right? All these different people, all these different groups and special circumstances where you would be a fool to do it yourself as a non-tax professional. In that particular group, you need to have a couple of very particular expectations, okay? Number one, they cost way more than you think they should. And that's not to say that they're overpriced. It's that there is a supply-demand problem in this category. And so if you want a highly competent tax professional, somebody with 10, 20, 30 years of experience, somebody who actually truly knows the tax code well and can solve just about any tax problem, you are going to pay a premium for their talents, full stop. Okay. I think it is very unreasonable for anybody to expect to pay less than, I'd say, $1,500 to $2,000 for even what you might personally say, I have a very simple return. Doesn't matter that you think you have a simple return. That tax professional's time is at a premium, and they are going to charge you a premium for it. So if you have a talented tax professional that you love, sort of as the expression goes, tip your waiter, expect to pay your tax professional very well. The second thing is to understand that extensions are not evil. Right, these tax professionals have a finite amount of capacity and bandwidth. They work with complicated clients, and so it is very normal for them to say, if you cannot get me your documents, all of your documents, not 90%, all of your documents by a certain deadline, you will be extended. And even if you're not planning on being extended, it is not uncommon for them to say, we are filing an extension anyway, and if we happen to be April 15th, great, but just prepare for that. Because what's happening in a compounding way is that a lot of tax professionals are extending their clients, including corporate returns. And so then you as individuals are often not getting things like your K-1s faster, right, or in a timely manner, such that you are then being forced to wait past the April 15th deadline for your tax documentation. And so a lot of people with complex tax profiles are being forced to file in September or October because they don't have their full documentation until that time. And so all of this comes around to saying, if you work with one of these highly talented tax professionals, Be the best client you can be, because almost every tax professional I know in this category will happily fire you as a client if you are a pain in the butt. What does being a pain in the butt means? It means showing up on April 15th with a shoebox. It means not getting them your documentation. It means hemming and hawing or complaining about the tax organizer they ask you to fill out. It means arguing with them about what they say they need from you. That's a really big one, because a lot of people say, like, I don't want it to, I don't know why that matters. I don't know why you need that. It's their job to know why they need it. It's your job to provide it if you're hiring them for that purpose. And finally, from all of that, get your expectations set early. Okay. They have sent something to you probably already explaining how their tax season is going to look. You need to read it in full, and you need to follow the directions of anything they or their team send you. Okay. Because if you are a person who's gumming up the works, you are setting yourselves up to get fired as a client, because they are drowning in work. I mean, literally and figuratively, they are drowning in work. And so from that particular standpoint, do not be the squeaky wheel. It is not a situation where the squeaky wheel gets the grease. It's a situation where you and all your stuff get thrown out the window if you are a pain in the butt for these professionals. So if you need them, if you have a business, if you have complex business interests, if you have a lot of partnerships, if you have a crazy portfolio with 300 pages of transactions because you're a day trader, if you have a trust, or if you're responsible for a trust that needs its own trust return, if you have a family member who's become deceased and you need help filling out their final tax returns, or you're now a conservator and you need to take care of somebody else's finances, if you need a truly skilled tax professional, you need to pretend that you are trying to get the best job on earth and you're trying to be a model candidate for it, because these tax professionals are fed up with poor quality clients, and they are raising rates and they are firing people left and right, and they are happy to do it. So all of this, to back to your core question, how do you prepare for a successful tax season? You do it by being a good tax planning client. If you are a tax planning client and a tax preparation client, and if you don't need a professional's help, then you don't complain about it and you get your own stuff done, and you do that by the table stakes of getting organized.
Thanks. That was a lot. I think there's a lot of great information in there. I think one of the things I've been seeing recently with some of the folks we work with is, compared to financial planning, and that we want long-term relationships. It seems like some of these folks are switching between tax preparers and trying to find new ones year over year and whatnot. But let's say, use me as an example. Let's say I have no interest in being the squeaky wheel, and I want to be a model client for a tax preparer, and I have a situation that warrants hiring a professional. Is right now the time to be reaching out and finding a new tax preparer? Should I have done that already in theory? Or when is the appropriate time to make their life easy and say, hey, I'd like to engage you in tax prep services?
If you need one because you are behind the ball, or because something has just popped up on your radar suddenly and you suddenly now need a tax professional, get on it today. Because the second we start getting into February, you are now a problem child when you start reaching out to these people, because you are not a client, you are not a paying customer, you are a prospect. And tax season is not really the time that most tax professionals want to talk to prospects, right? They've got a 9-month window of the year where they're not nearly as busy as they are right now. But essentially from February 1st through April 15th, and even a little bit beyond, they are really darn busy. And so you need to be an ideal prospect for them to really want to even spend some time bringing you on board. So January, here as we're recording this, right, Monday as this publishes, if you are in the camp where you're like, I think I need a tax preparer, go get one right now and prepare to be at the back of the line. That's the other thing to contemplate here, is if you're coming in now, you are not their A-list client, and they don't have the time to get organized with you and have the full conversations to make you an A-list client unless they are brand spanking new, just hung up their shingle yesterday. Okay. So in those particular cases, right, if you need a tax preparer or a tax professional, you need to go get one today. And again, you need to prepare to be a model client for the next couple of months. And frankly, and this is going to be a little bit tough both for you to hear as a potential client, and it's going to be tough for some of the tax practitioners who listen to this podcast. You need to prepare to feel like you're not getting your money's worth. That's a really specific description. What I mean by that is not that they're not going to do the work for you, not that the work they're going to do for you isn't going to feel valuable, but you're going to write a check for over $1,000, possibly several $1,000s, and you're going to feel like you don't get very good service for that check. And that is a byproduct of this environment. That is not your fault. It's also not their fault. It is often just a byproduct of, if you were trying to get in the door here at the last possible second right before tax season, have not had the time to prepare adequately to give you a world-class experience during this tax season. You can expect that going forward if you maintain a longer-term relationship, but if you are the last-minute person squeaking through the door here, just be cognizant that you are probably not going to have a super great experience in your first year. It's not your fault. It's also not their fault. It just is the circumstances that you are coming into the business and the timing that you're coming into the business.
All right, ladies and gentlemen, you have been warned.
And again, I would love to see all of this be better. I would love there to be 3 times as many tax preparers who are competent and skilled. I'd love to see prices be lower. I'd love to see service be better and timelines be better. There's a supply demand problem, point blank. That is just the fundamental root issue here, and that may get solved over time, but we live in the present, and in the present there's a big supply demand problem here.
All right, well, let's not live in the present for a sec, Dan, and let's actually take a step back, and look at the year in review. It's always great to look at what's ahead, but I think it's also, a good time to reflect and look at maybe the year in review and see what we can take from it. So first and foremost, for 2024 is a pretty exciting year. I personally wasn't here for all of it, but it doesn't mean you weren't doing some great work with some great clients here. So are there any takeaways or things you might have learned in 2024, either through practicing or through specific clients?
I think there's a very particular lesson, and I have to think about how I want to articulate it here. Bear with me as I sort of work my way through the thought, but I think the particular lesson of 2024 is to not make exceptions. And there's a couple ways and places that this manifests. Daniel, what is it that I say about how people treat us when we first work with them?
How they treat us in the beginning of an engagement is how they'll treat us indefinitely.
Correct. And somebody is immediately going to jump up when they hear that and be like, oh, no, like sometimes stuff happens, but it'll be great long term. Like in individualized cases, maybe, but it really just in the law of large numbers, if somebody is late, tardy, reschedules 15 times, emails you at 1 a.m. on Sunday morning, and then is mad that you haven't gotten back to them by the time that you actually woke up, etc., like they're probably always going to be that person, or they're probably always going to behave in that particular way. And so you do need to be cognizant of that. I think there's sort of a garbage in, garbage out thing around work product and work quality, but I think there's also a garbage relationship in, garbage relationship out thing that can occur as you start to have a relationship with any particular client or consumer. I think in that context, it's important to apply that to a lot more than just the clients you work with. So, for example, historically, I've had a very disciplined approach to growing the firm in terms of marketing, in terms of hiring, planning well in advance, having very particularized systems for how we go about hiring and recruiting or doing that sort of thing. I'm not going to go too much into it, but last year I was presented with an opportunity early in the year that was not part of the plan going into the year. And in sort of my excitement for that opportunity, I made a lot of exceptions. I didn't apply the same sort of stringent approach that I otherwise would have. And on some level, spent a good portion of the last year, I'll say, struggling because of that exception. And not struggling in like a I'm not going to make it sort of way, but just in a this is not optimal, this is not ideal, this is not how I normally do things or want things to function. And I'm tricking myself into thinking it's a temporary challenge, but as time is going on, the challenge isn't changing. It's just still there and it's still causing issues. And so it's something where, the School of Lessons Learned teaches the best classes. I think from 2024 for me personally and as a professional, the biggest thing really is just to kind of build a plan and stick to that plan. And Semper Gumby, always be flexible, but don't make exceptions. Don't fall into the shiny new objects trap, because functionally there's a reason you had the plan that you started with. And I think it's probably improbable that something that just pops up at random, even if it seems like a good idea or a good opportunity, is going to work out the way that you want it to. I hope it does if that's a route you go down, but it's something that I think is a tough lesson I've had to deal with over the past year.
I think that's great. Excellent. Thanks for sharing.
But I think this is a really good opportunity to invite you into that conversation, Daniel. You've had a whirlwind 2024, so I'll ask you, what have your lessons been for the past year?
Well, sticking in the context of financial planning, I think one of the things I noticed when I started working here is that we charge on a net worth basis, which for the most part means we're rather agnostic towards if somebody wants to put their money in a small business, a real estate investment, or the market, as long as we approve of it and it seems reasonable. That said, at my last firm, we typically leaned more toward investment management. And I think one of the things I've realized and noticed with a lot of our clients is the variety in the ways they've built wealth. So we have some folks who are equity driven, some who are real estate driven, and some that have small businesses. But there isn't one way to build wealth. And I think that's interesting. For example, we had an individual who we won't be working with come in yesterday who was adamant that the only way to build wealth was through real estate. And you couldn't convince this individual otherwise. And I think there are a lot of people that actually have deep-seated and deep-rooted beliefs in some of those things, like, hey, stock market is king, everything else is garbage, or small businesses are the only way to build wealth. And the reality is they're all wrong. There's more than one way to build wealth as long as you're consistent and have habits that align with the long-term goals. And I think that's something I've appreciated in the 7 or so months I had in 2024 here.
I think it's a really interesting sort of call out. I don't think it's the lesson I would have expected, but I think it's a particularly interesting one that stands out because, that is one of the nice things about our practice. By not getting paid based on just investment assets, we attract a more diverse client base. Because we can work with people who are DIY real estate people, or we can work with people who are entrepreneurs who don't want to save in their 401k. They just want to reinvest in their business and grow. But I think the particular observation there is really, really important because there are certain things out there, something called the stock holding puzzle, which essentially posits that given that the stock market is historically the strongest builder of wealth, it's strange that more people aren't involved in it. Or that more people don't focus their wealth building activities in it. But there's something to be said for look, there's ways to build wealth that are sort of passive. And I'd put something like stock market in it as long as we're buying index funds and we're not trying to beat the market. It's a very low effort way to build wealth. But conversely, as we approach kind of our wealth building activities through things like real estate or entrepreneurship, there's ways to build wealth that are sweat equity driven and eventually leverage driven as far as the willingness to hire people or borrow money or those sorts of things go. But it is about that consistent execution. Back to the top of the episode, right? It's about establishing a plan and putting in the effort, putting in the activity to make the outcome occur. It's not about just saying, I want to own 50 houses by the end of 2030. It's about saying, okay, what job do I need to work to build the wealth, to borrow the money, to get the down payment and the actual mortgage to buy the property, to then leverage into buying the second and the third and the fourth, or to build the business to make it replace my normal W-2 income to get to the point where I can hire people to then expand the business and get it to a point where it's a business that operates without me versus just being a glorified job. I think those iterations and that effort really is a pretty important observation that goes hand in hand with your own lessons of 2024.
All right. Well, looking toward the new year again, Dan, I actually have a different question for you. Now that we've reviewed 2024 and now that we're in 2025, what is something that you're very excited about in 2025?
I'm really excited about sort of the development. Last year was a bit of a transitional year, both with your joining the team, Emily promoting to associate planner, working around the onboarding of another financial planner on the team's client relationships as part of a transition and sort of merger process. And as we look into 2025 is a year where there's a pretty clearly articulated plan going into it. And back to lessons of 2024, we're going to relentlessly execute on it. So you're going to have new client relationships. Emily's going to have new client relationships. You're both going to work on your personal and professional education to develop as stronger financial planners. And really the only two kind of big events throughout the year that sort of stand out from that is we're in the process of hiring an admin. We had 221 applications. We're going to have 10 interviews next week for that role, or the week of this podcast coming out, we're going to do 10 interviews and have a new admin to give us a little bit of support there. later in the year, we're looking at hiring a marketing specialist to start working on sort of the more systematic, non-personalized, non-network driven or non-reputational driven parts of marketing. And that's it. For me, my entire focus in the coming year is supporting you and Emily in growing as financial planners, both in your relationships and your professional skill set, and really functioning as more of an operating business versus a practice in which we're all sort of, I'll say, ping-ponging between each other and supporting each other. We'll still do that, but really trying to get it to a more systematized place where functionally we're able to operate as a business unit, as opposed to the practice of Dan that happens to be complementary with Emily's and with Daniel's and so on.
Well, it sounds pretty exciting, Dan.
I hope it is. I'm a great fan of the deadpan delivery, as you know here, but my excitement is palpable, I'm sure. The Science of Wealth is produced by My Wealth Planners, a registered investment advisor in Colorado. The theme song is This Is Your Time by Dan Phillips. The podcast is intended for educational purposes only and is not investment advice or any other form of advice. Not all material discussed on the podcast is appropriate for every individual in every circumstance, so you should consult with a certified financial planner, tax professional, or legal professional as appropriate before attempting to apply any of the subjects, strategies, or tactics discussed on the podcast.